In last week's episode, we covered hope-filled financial footstep number 2, take control. As a part of that step, as a part of taking control, I said it was important to review your existing insurance policies. Look at them. Ask, can I get a cheaper rate? And do the policies I have currently give me an appropriate level of coverage? Do they defer the risk that I can't take on in my current situation? Not do they defer the risk that I won't be able to take on in the future when I'm debt-free and when I'm investing? Do they defer enough risk if something catastrophic were to happen now? Even though we're at a step where we're getting ready to pay off debt, we still need to protect ourselves from complete and total catastrophes. And in doing this and shopping around and trying to update your insurance policies, there is a hope that you can reduce your overall insurance costs. Now, that might not be viable. You may very well be good with the insurance that you have in place now. That would be my hope. That would be ideal. But the most expensive insurance premium, at least in my experience, is easily my health insurance. I cannot begin to tell you just how shocking it was when I got into the working world and saw what a health insurance premium cost. I did not have the best insurance options through my place of work. And in hindsight, I really should have looked into someone who sold health insurance privately, separate from an employer benefit, because the coverage that I had was not successfully deferring all of the risk that I needed deferred. I've teased some of the facts for this story in past episodes, but to start this episode, we're going to talk about why I ended up leaving my very expensive health insurance option through my employer and signing up for a health cost sharing ministry as an alternative. So I got out into the working world and I got my health insurance, and I'm pretty sure that my employer covered the bulk of the premium. At the time, considered myself young, healthy, unlikely to need to access the health insurance. So I thought, well, I'll go with the highest deductible plan they had, and that would help me qualify for an HSA, a health savings account, right? And that seems like exactly what I needed. What I didn't do is fully comprehend what the catastrophe high deductible health insurance actually covered. First and foremost, the premium was more than what I'm paying now for my whole family through a cost sharing ministry. Let's just say it was $14,000 for my annual health insurance deductible, and that was in network. If I was out of network, which would be very likely if I were traveling, and I did quite a bit, I traveled at least once a month during my early time in Utah, that deductible would be doubled. So we were getting close to $25,000 to $30,000 for the deductible. What my liability would be before any of the insurance kicked in. It wasn't an 80-20 deal. It was 100% my responsibility to cover the costs until the deductible was met. And even then, there were some other catches that could really get me hung up and not defer enough risk. When I first got this policy, I did not have my deductibles worth in savings, the deductible out of network for sure. And that meant that it was largely unwise for me to have this policy. I don't think I would have appreciated taking on that much debt in the case of a catastrophe. Fast forward a year and I get married to Amanda, and I add her to my health insurance policy for just a little bit of time. She was getting ready to start her teaching job, and for some reason I thought it would be cleaner if we were both on the policy. What I didn't realize was just how wildly expensive that was going to be for the premium. And without going into too many details on how my employer worked, I had my out-of-pocket costs that came out of my paycheck, but my employer treats me as my own profit center. So all of the productivity that I was providing for the company went into the profit center, and all of my benefits were paid out of that profit center. And my profit center account could go up or down. And as a result of simply having the least expensive option for health insurance, my account started going negative, working more than what I was thinking was normal for full time. And you remember that deductible thing? $14,000 is what I remember. Well, it doubled. It was per person. So now there's two of us. There's me and my wife. And that deductible still doubles if you end up seeing a provider out of network. So we went from $25,000 to $30,000 deductible with just me out of network to a potential catastrophe where we're both on the road, we both end up in an accident, and it could cost up to $60,000 for us to cover our deductible before insurance did anything. And we were paying a ton for that premium, in my opinion. Now, we were only on that plan together for a half year or so. That following year, Amanda got on her own employer's health insurance plan, and I stayed on mine. So we had two different health insurance plans. But having gone through this roller coaster, I knew that there had to be a better way. There was no way that this was the kind of cost that I had to put out there for the what if I run into a major health issue. But it's important to protect yourself from health catastrophes. Having a major health event is the number one reason for bankruptcies here in America for the everyday common person. At least that's what I think I remember. If I'm wrong, someone correct me, please. Well, I ended up talking to my parents about this situation, and they have a health cost sharing ministry. Theirs worked very different than the one I ended up picking. I did a lot of research on them, and there's some nuance into what a health cost sharing ministry does compared to insurance. That's what we're going to be covering here in the main topic in a moment. But I ultimately switched. And in doing so, our monthly premium, it's not a premium with a cost sharing ministry, it's an equivalent. Call it the monthly share, because what you do is you share. You don't get charged a premium. You willingly share to the ministry. That's kind of the way that it goes. It was less than $300 for the two of us, which was less than my out of pocket for just me on health insurance, let alone what my employer's contribution was. The deductible was just over $10,000 in or out of network. And that was so much more tenable for our situation. We've been with our health cost sharing ministry for years now. And while our monthly share has gone up to being almost $400 now, we are on a family plan. Our deductible is the same. It's still just over $10,000. We kind of are grandfathered into the option we have. It's no longer a standard plan that you can get with the particular ministry that we have now. And depending on when you're listening to this, here in about a month or so, we're going to be a family of 4. And even if we add more kids from this point forward, our monthly share does not go up. We're kind of at the top now of what that monthly share should be, unless we wanted to ever bring our equivalent to a deductible. I think they call it the annual household portion if we bring that down. In essence, I was able to take the risk that I was taking on and reduce it. In a sense, there's a caveat, we'll cover that, but I was able to reduce it for less cost by going from health insurance to a cost sharing ministry and provide better protection, if you will. That's the hope, that's the prayer for my family than I otherwise had access to. Now, one last thing I want to say, to the credit of my employer, they did eventually switch health care providers to someone who has a much more tenable policy for the employees there who currently are looking for health insurance with an employer contribution to their premium. It still does not beat the cost sharing ministry. Had we started with that one, I don't know if we would have switched. Because we switched and we've stuck with it, I think it's still all for the better.